All right. Hi everyone. Welcome to the TimingResearch.com crowd forecast news for December 16th, 2024. We are recording this at 1 p.m. Eastern Time, and this is episode number 459. So today, the option professor is back to give us his five best option ideas for the end of 2024. But first, I just thought it'd be interesting to show uh, this chart from the this tool called Seasonax that I like to look at for seasonal trend identification. And so within the next few days, um, or this week, you could say, starts a big uptrend for gold seasonally. So this actually shows what GLD, the gold ETF, did for the last 20 years. And you can see it's 85% of the time it was up during this period. But gold has been up so much already this year. It'll be interesting to see what what happens with it. So, Jim, do you have any thoughts about
Yeah, well, I'm going to
gold?
talk about the gold, and we'll
All right.
see if my trends and momentum actually matches up. I can see that real quick. I'll just put this in here,
So,
and let's just see if yeah, because it had the good correction, okay, and it went down and it held this 2550 number, and then 2620. So
oh,
as
here,
far as
uh,
what it,
you can
yeah,
go ahead and share your chart now, and so
okay, good,
we
yeah,
can see what.
because then yeah,
I just wanted
okay.
to. I just thought that's an interesting trend that plays out every year. So, for everyone listening, if you want to learn more about that tool, it's just called Seasonax. You can go to timingresearch.com/Seasonax. That's Seasonax to learn more about that. And right now, I'll turn it over to Jim.
Okay. Hi, everybody. This is Jim, Option Professor, and I'm going to be talking about my opinions and my observations here today. And I'll go over many markets, many ideas. We'll give you some of the top five things that I see going into next year, which I think are very interesting. We've had some very good fortune here in the last couple of weeks with some of these stocks that were down, which is the kinds that I like to do, not the ones that have already run up. Like people say, what about Tesla? Hey, listen, man, Tesla was a great thing to do at 240, 220, and 340. But you get up to the stratosphere, you had already had should have done it. So I'll go over some things like that, but I'm not giving any advice. So obviously, it's just opinions and observations that I'm sharing with you. And of course, options are not right for everybody. They have substantial risk. So make sure you talk to your broker to figure out what your suitability and risk tolerance is before you even entertain anything. Okay. Now, we are sharing the screen here on gold. So David made a point that the seasonals are quite good on gold. Well, let's go back to the 20-year graph, and we can see it's in an uptrend, but it's certainly very extended. Extended means the moving averages are down here, and the price is way up there. On the 5-year graph, you can see again, it had a reversion to the mean to 2550, and now it's back on the bicycle. Still hadn't taken out 2800, so it's still on a little bit of a defensive here. But it is above two key numbers for me, and that is 2620 and 2550. So as long as it stays above those two numbers, I got no problem with gold. Starts getting underneath those two level numbers, and then a substantial drop down towards 2500. And like I say, I don't know if this is an up flag down pole, but it's starting to look like one, right? Yeah, this is on the 5-year graph. So if this thing starts breaking underneath, now getting back above, I'll tell you good numbers to keep an eye on. If the gold were to start closing above 2671, which is $20 away, that would be very, very good for gold. And that would make that seasonal thing look more and more likely. Okay. If it can't get above 2671, though, obviously you're not going to get a big run up. So nothing to miss out on until it gets above that number. You see the red line? That's where I'm getting it from. And then of course on the pullback, you can see it could go under 2600, and that would be the 2550 number again. Or it could even go further down here and catch a break around 2500. Here, this is not where you want to see when the markets are going up. My red, green, and blue are above purple, and they're all above each other, rising. That's why gold was a no-brainer this year, because it turned up right down here at around 2 grand, right? And or 2100, and it has been basically a train seal going up, 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 and up. Big pullback to 25.50. That's called reversion to the mean. People go, Jim, why are you always talking about reversion to the mean? I go, because it happens all the time at some point. Now, once you had what? You had a divergence. What was the high point here on RSI? 70 something, 72. Up here, it's at 58. That's a divergence. That tells you it's out of steam. Red line starts pointing down at 27.50. You got to get out. And where is it going? It's going to go down to either the purple or the gold. This is called an extended or move. And this is called an emergency move. So if you hear it at 2400, that means it's really got problems. At any rate, the gold again has a high point up here and a high point up here, and now it's underneath the blue. So here's, like I say, 2671. I'd be more than interested to get back on the train because it'll be above all these numbers. You see 26.7. Let me get back over here for you. 2673, 2662. Okay. It's got to get above those numbers because the promised land's at 2750 and 2850. And it's not going to get there unless it breaks above these things. Plus, with these averages underneath the blue line, that's not very good. So if it starts breaking underneath, I told you 2620, you see those numbers there. What was the low here about this 2620? Yeah, 2625. Start breaking that, starts breaking 2550. They're going to be saying timber. Okay. Again, so there you got parameters because as long as it's not doing either one, it ain't going anywhere. And I'm not interested in the things that aren't going anywhere. And the longer they're in this window, my job is options, right? So that means the volatility is getting lower and lower and lower, which means what? The premiums are getting lower and lower and lower. And that's how you make a lot of money on options. You buy them when the premiums are low and then a big move happens, right? Because the premiums are not discounting the volatility that hit the market. Right now, this market is not discounting a move down to 2550 or 2400, and it's not discounting a move to 2800 because the reality is it's range bound in a tight window and it's been in there for a little bit of a while. So, like David was saying, seasonals are telling you it's going to break to the upside, and that's where the long term trend is. So, it wouldn't be shocking. But it's going to be very shocking if it can get to 2750 without going through 2675, right? Right. Okay. So there you go with gold. Now you know what to do with regards to where the prices are. All right. So let's go around and take a look at what's going on in the world because, again, there is a consensus, which is always dangerous, that the cutting of the rate on Wednesday is going to be the shot heard around the world as far as jumping back into stocks and causing a big rally at the end of the year and a big rally into January. That is the consensus. So let's take a look and see what's going on. First of all, when I talk about reversion to the mean, this baby here, the stock market, is a poster child for a reversion to the mean. Why is that? Because look how far it is from the averages. Now, if we go up to 6,500, is it going to be less overbought? No. So I hope it goes to 7,000 because when it does revert to the mean, the higher it goes, the bigger the reversion is going to be when it has to come back down and test something. Right now, you can see 5,500 and then under 5,000 is in the cards if there was a significant drop. Now, what could possibly go wrong? Well, let's see. We've got a new administration coming in with an interesting cast of characters and a very interesting philosophy. Everyone says it's not everyone. Obviously, many people who voted that way think that he's got the answers, right? And obviously, as a citizen, I hope he does. But is there a possibility that he doesn't have all the answers? And is it a possibility that everything that's supposed to be, shall we say, drain the swamp doesn't work smoothly? Well, since nobody's betting that way, I would say that maybe that could happen. So I think Q1 is going to be very interesting because you're going to be looking at a situation where if things don't go well of trying to get rid of everyone out of the country who doesn't belong here, and it doesn't go well going around and hitting a bunch of depressed economies with tariffs. I mean, I don't know if you know Europe's not doing very well. And I hope you understand China's not doing very well. They just had retail sales come out and not doing very well. They keep talking about stimulus, but the only stimulus they seem to be doing is bailing out the municipalities. That would be like if our government was bailing out people, but it wasn't people they were bailing out. It was the city of LA, or it was the county of New York or whatever. So again, they're not putting checks in their citizens' pockets yet. And until they do that, I don't know how they can change things that much. But needless to say, hitting people with tariffs where they have slow economies might not be working out exactly as you hope. The other thing is obviously ending all these wars, supposedly on a moment's notice. That'll be interesting to see how that works. But there's things that could go wrong. And if they go wrong, um, and the confirmation hearing could be very interesting as well with some of these people. So the market is not priced for anything to go wrong, not earnings, not anything with Trump, not with the geopolitical, not with the price of oil, not with anything. Okay, not with the Fed. That's not the price you get when people are expecting problems. Now, here's the other thing. No evidence of a drop yet. That's why you can't hit it. No evidence here on the 5 year. Extended, yeah. Could have pulled back, yeah. But I got no evidence of it rolling over. So you don't step in front of freight trains. Right now, they tried to bring it down, but these lines aren't crossed over and pointing down. Can you see when it goes down like this? They're crossed over and pointing down. That's not happening. What am I going to be the first guy at the party? No. So when they do roll over, I'll be there and it'll come down sharply and I'm going to try to take advantage of it. So, but I'm not going to step in front of the freight train because right now, guys like Tom Lee, the big guru on TV, he's talking about 6,300 and this and that. So, the charts certainly say that it could happen on the 1 year, on the 1 month. Okay, they tried to bring it down, but look, the blue line's not pointing down, right? And they put it right back above the line here. So all they're doing is chopping you up, chopping you up. Now, if we were to get under what 60-60, right? And you got the red line to point down, the blue line to point down, and the green line to point down, that'll be your first sign that this thing could be rolling over. Because you see, when it crossed over here, blue line never turned down, green hardly turned down. So there was no signal down here. Signals when they're all pointing down. Let me show you an example on something like that. Yeah, they're all pointing. Even here, the blue didn't point down. That's why this is so temporary. Same thing here. Blue didn't really point down. That's temporary. To get this thing to really go on an extended move down, you got to get all three of them pointing down. And that's not going to happen overnight because these are moving averages based on time and price, right? So it takes time and it takes price to turn them around. So when you had a really big move back in 2022, again, on the 5 year graph, they're all pointing down. And where's your destination? Your destination is going to be purple or gold. What did I tell you? Purple is an extended move, and gold is a very extended move. And they generally are good places to think about either taking your shot, like 3,400, or if they can get back on the bicycle, which means getting above purple, another great time to take a shot. So when was the best times to take a shot on stocks? When you're pressing my goal and when you got above purple. Because look at that. That would have been October. Was that a good time to hit it? Once it got above purple, pulled back. That's called reversion to the mean. Blue line's clearly pointing up. That was an unbelievably obvious place to give it a long shot. Here, obviously, great place to give it a long shot. You can buy anytime you want, but I'll give you a tip. You want to buy at the best time possible, not just any time you wake up on that side of the bed. Okay, so what else is going on? I just told you. That's what you need to see. You're going to need to see the monthly turnover, which it tried to do, but it hasn't done it yet. And again, prices under 660, under 640. And then I say this number here, which is around 6,000. These have to get taken out if you're going to go on a substantial drop. Otherwise, again, it looks like it wants to take off again. And where's my red line coming in now? Coming in around 60-60. So getting above 60-60 today obviously got people long. That's why it's going up. And there's your 6,000 number here. And then if you really got a deep cut, you go down to 59.50. So that's your neighborhood. If you're long the market, as long as it's up in this neighborhood, you're okay. starts breaking underneath there, you better have some kind of an idea of what you're going to do next. Okay, QQQ. Again, very extended. This is where you're supposed to be taking your shots, right? 490, 495, right? While it's rising and being tested on a reversion. This is supposed to be land of milk and honey. You're not supposed to be just starting out here. And again, talk about extended. That's way above the averages on the 5 year. Again, extended. So we could get parabolic going into the end of the year and next year with the animal spirits, but believe me, it is not getting any less overbought. And the VIX. Let's all talk about our buddy, the VIX. Because the VIX is a very good indicator. It's implied volatility. Now you go out 20 years, and what's the VIX doing? It's at 14. Look how low it's been. The lowest it's ever been here pretty much is around 10, right? Uh, yeah, 10, right? It just went down to like 12, right? 1270. And now it's already back into the 14s. And look at that red line. I think it's turning up. Where is it at? 1507. This thing starts trading 15 and better, and then it gets above 18. So you start breaking above 15 or 18, that means the market's going to have a correction. If it doesn't, people are very comfortable buying stock as long as we're underneath 20. Okay? That means the volatility is not that bad. So if they want to put in a whole bunch of money, they're comfortable doing it. But you know what? When it gets above 20, they're very uncomfortable doing it. And if you get above 20 and the market starts tanking, you have what they call a buyer's boycott, meaning nobody wants to buy except the market makers. Who are they? They're guys like Citadel. And if they're the only liquidity out there, I can feel pretty good telling you it's going to be lousy prices to get done. What does that mean? When the market is going through the roof, you're going to find there, if they're the only buyers, like after Trump won, you're going to find the S&P at 6,100, 6,150, and then they're going to fill everybody off that volume. And then if there's no volume behind it, it'll fall right back down, which is just what happened. Or if they're the only ones buying, like August the 5th, when Japan is doing the unwind of the carry trade, and the whole world is dumping stock, and there are no buyers except the market makers, they're going to give you a bid price down at 5,100 on the S&P, and then after that volume is filled, it'll go right back up because sometimes the volume dries up and it goes the other way. Let me show you an example of that so you know what I'm talking about. It's not a conspiracy theory. It's basic economics. If you were putting up your own money and you were the only guy selling, wouldn't you raise the offer as high as you could? Of course you would. You're putting up your own money. So that's why after Trump gets elected, when is that? November. And the whole world is buying into the stocks, right? Look at that big jump. Really quick. What was that, like in a week? Right? So obviously there's nobody selling, and that's why they're going to be the seller up here over 6,000. Then it comes back down to 58 and change. And obviously anything they sold up there, they could buy back here at a profit. Same story now. Everyone is buying and they've raised the offer, but there's back and forth action more. This was when there's not a lot of back and forth action. Just like I told you about August. You see August? Who do you think was buying during the collapse here? John Q. Public? The guy with an odd lot amount of shares is he going to support? No. So everyone wants out because Japan's unwinding a carry trade. And the only buyers are going to be the market makers, and they're going to give you all you want. You can fill all your orders if you'd like right here at 5,200, because when that volume is all done and they find out the world's not coming to an end, they feel pretty good that if they give you the price down here, they're going to get a chance to get out up here. So again, have to see what happens, but the higher it goes, and if it goes on a spike up move, nobody's selling but the market makers. So I would be very wary between now and January, if we went up to 6,300 or 6,500, that it would be able to be sustained up there. Because what do we have going for the stock market? We've got animal spirits and a lot of optimism that Donald Trump and his ideas are just going to work out lovely. And they might. but it's also being discounted, right? So buy the rumor, sell the fact is certainly something to consider. What else do we have is we have valuations that are extremely high. So what does that mean? That means that they have to get the earnings to come in very, very robust in order to keep the thing going. Now, some companies are forecasting very good earnings. Last week, we had a webinar on TimingResearch.com, and we discussed last Tuesday how some stocks looked like they were bargains, particularly in the SMH. So the big companies in SMH are one is Taiwan Semiconductor, and these are some of the ideas that we talked about. Can you see in the, let's just see here, we were around here about a week ago, right? And I was saying this is the area. If you wanted to take your shot, take your shots. Premiums were very low on the calls, and now they've jumped up through the roof. Same thing with Broadcom. This was last Tuesday. Where were we last Tuesday? We were in this little traffic jam, right? This was the place to take your shot. Why? They were coming out with earnings, and this company makes a lot of money. Not only are they making money, but they have a very good future to them as far as their guidance. And as you can see, this is when you want to take your shot, and this is where you're making quite a bit of money on that shot. Okay. So again, there was one that we thought looked pretty good, but it didn't do much, and that's NVIDIA. Now, why would that be? How about if the Chinese government decides to put an antitrust investigation on you, talking about you being a monopoly, and you have significant business interest in China and significant exposure? Would that put a little cold water on it? Yes, and exactly what happened there. So I would suggest that we had better hold on to the purple line, which comes in at 127 and change. And that's pretty close to where we are now. I also would say the 5-year graph, we would want to hold into the green line, which comes in at 127 and change. And if that doesn't hold, we had definitely better hold the 120 levels. You want to know anything about NVIDIA? 120 to 127 is the big support zone. And if they go into that zone and everybody's selling, you might figure out the market makers are willing to buy against those numbers because they'd have this chart just like I would, and they can see that it supports on that level. So that's the story with NVIDIA. Breaks under 120, I think we're in a little bit of the unknown at that point, and that opens up 110 here. On the upside, when would you know maybe it's turning? Here's when I would know if it's turning, if it gets back above 141. Gets above 141, then these things can start turning up, and then you could open up the door to 150, 160 in the beginning of the year. So right now there is water thrown on this. They have been taken out of the ball game. Why have they been taken out? Because China has decided to investigate them and maybe cause problems. Now, this is also an indication of what might be happening next year with regards to tariffs, because we're supposed to be this big, big, powerful country that nobody can respond to and retaliate. Well, if you were going to retaliate against us, wouldn't possibly goofing up the biggest sector that we have going for us, which is the tech AI sector, and wouldn't NVIDIA, which is a big weight in all of our index, be another thing that could goof things up? I think that's what China's thinking. So that's why I think they're starting with that as an indication that they are not going to roll over and play dead if we go in there and start using a machete to the trade agreements. Also, like I say, their economy is very, very weak. And so they don't really want to hear about a bunch of tariffs or a bunch of problems because they already have problems. So again, not many people I don't know are talking about this, but I certainly am. So there you go as far as that's concerned. Let's talk about some other stuff right now that we have been talking about so you can see where I'm getting these ideas from. Google. Look at Google. Right here. You see right here? This is where we were talking 2 weeks ago that Google was a fantastic place to get involved. And as you can see, it is a fantastic place to get involved. But if you want to get involved up here, you are obviously not getting quite the deal that we got back down here. So, are there other markets that might be giving you that kind of a deal? I found a couple of them last week, and I will show them to you this week. This is Micron Technology. Can you see it's a good deal down here? Now it's a very good deal this week because it's moving. How about Nike? Let's see if that's going to do anything. Not as much. Still having trouble. But again, this is probably going to break one way or the other, which would mean the calls above and the puts below might be of a decent value. I would keep an eye on it. Again, it is definitely had a one move, a two move, and as long as it can hold above this number here around $75, and it can take out $80, it would open the door for a nice big spike up. They have got earnings this week, so we'll have to see. Likewise, if it starts breaking under 75, there's not much holding on to it. Let me show you why. This starts breaking 75 and then breaks under 70. There's not a lot underneath. Let's go back to the 20-year graph. That's why I like to look at all types of time frames. Yeah, this thing breaks under 70, you got 50 almost. So, I don't think it's going to stay the same, not with the holiday season and earnings coming out, but anything can happen. But I would imagine there's going to be some volatility there. So there's two things right there off the bat that we were just talking about. Paychex is coming out with earnings, and they are already way up. So it'll be interesting to see if they can hold their water. Going back over here to the 1-year graph, you'll notice that it has rolled over a bit. And you'd wonder at 141 if it's going to bust out under 140. That's a heck of a lot of potential on the downside there. Likewise, if it can get back on the horse, it is right here on some support number. So I don't think the 140 number will stay the same, especially when they've got earnings coming out. I would expect volatility on Paychex as well. So, there is a lot going on as far as the markets are concerned. But let's talk a little bit about next year. And again, this was another one that I identified for people called the Semiconductor Index, of which NVIDIA and Taiwan Semi are 35% of it. Obviously, stocks like Texas Instruments and also like Broadcom and things like that are also big. But let's take a look at it real quick. Yeah, you see, I thought this one was going to take off, and it could take off in a big way. Can you see this chart right here? This is a good time to take your shot around 240. It's already at 250. It used to be 280. So if it goes up to 280 on some kind of a big run between now and January, there's an opportunity here. And one of them that was doing well, but I think it slowed down, was the software. Excuse me. So you can see software went to 110, and that was like in November. And you can see we haven't seen 110 in a while. So this thing stalled out, and the money seems to be rotated back into the semis. So it'll be interesting to see, but I thought I'd identify that for you. So there's an idea, the semis. What doesn't look like a great idea lately is the small caps. But they're getting back up now. That's good. Let me show you what I saw on that. Okay, this is where you take your shot. That's what I told people here. This is the neighborhood right here. And what was the number? 232. Right there. Okay, it's already at 235. If this thing is going to go back up, this is the neighborhood where it comes from. So if you've been out of the small caps, this would be a nice place to start looking at taking a bite. And if you're in there, you better hope that this thing holds, because look at the next level down. Not very pretty. And this 225 still does have a gap. Again, this is an interest rate play. So let me show you the interest rate situation. These guys need to borrow money. 40% of them are losing money, and small companies like to borrow money. One good thing is they don't seem to be hit with the tariff bug, because a lot of it's domestic. So let's take a look at Treasury notes and see if there's anything happening there. Here's my scenario there. You see the blue line? When everybody, after he cut 50 points. The Fed cut 50 points in September, and the whole world was yelling, lower rates, lowering rates. And I was telling people, listen, this thing is hitting right at 350, 360 on the 10-year. That's the place to short bonds. Okay. Short them and basically look for higher rates because, that's an inverse deal. You short bonds when you think rates are going up. You buy bonds when you think rates are going down, right? So obviously, shorting bonds here was genius so far. We'll have to see. But you can see there is a willingness for this market to go higher in interest rates. And why would that be? Well, I'll tell you a couple of reasons. One is you've got what? 4% unemployment. Okay. I don't know I don't know how they didn't run on this anyway. 4% unemployment. You got wages increasing higher than what? Inflation. You've got the services index today announced, and it's blowing out the 50 number now, another high, which means people are out there spending, right? So they got money, they got jobs, and they're out spending like drunken sailors. And not only are they spending their money, they're spending borrowed money. And I'll show you how I know that. Because there's a company called Affirm. And Affirm is like you go into Jiffy Lube and you can't afford to fix your car, and there's a big sign saying, we'll loan you the money. And so these guys are loaning the money. And look what they're doing, because we had this on our alerts at 27.50 a share. Look where it is now. Okay. So people are borrowing money at high rates. How do you know that? Because this kind of guy's going up, and then this kind of guy's going up, and they're not in trouble. Look at this. There's Upstart. Look like a pretty good deal. How could they be making so much money? Because people are not only spending their own money, they're spending borrowed money to keep this baby going. And how does that end? I don't think it ends well, but it's certainly not ending today. So these are some of the things I'm keeping an eye on looking at 2025 because everything is blue skies and green lights, which is lovely. And we're not going to fight this tape, no way. But we're also not going to fall asleep at the wheel. So somewhere in between there is where you want to be. Because again, this type of borrowing at high interest and the credit card balances being where they are and things like that, this is why. And we've got the debt out there. Supposedly, Musk and his buddy there are going to go around and take $2 trillion out of it. And of course, I just heard Mr. Trump say no one's going to feel it. 2 trillion sounds like a lot of money to not feel, but we'll have to see. Bottom line, though, is that this baby here, if it gets above 450, and if it ever gets above 5%, is going to change the landscape of the world because this is not why we're at all-time highs. We are not on all-time. We're on all-time highs because the Fed is supposed to be cutting interest rates, right? And so when that happens, is you're looking at a situation where people are looking for yield to be dropping, and that's not what's happening. So you got to keep an eye on this. And obviously, you see 430 is an important number, and I say 4% is an important number too. Let me show you. You see 3% down here, but here, the 360 number is now up around 365. But on the 5 year, this is the one that's got me right at 4%. So this baby gets under 4% yield, I'll definitely be on the lower rate bandwagon, but I'm not going to be on it here because there's no evidence of it going down right now that I can see. So there you go. Now that's why the IWM is having trouble. But if they're going to cut this week, which they're going to, that might give a little bit of a lift to IWM. And that's what made the 232 number on IWM such an intriguing place to take a shot. With regards to other sectors that people might find interesting here that are out of favor, well, there's a whole bunch of these stocks that are out of favor. This is called pharma. So you can see here, if you like to buy your straw hats in the winter, like old Bernard Baru used to say, this stuff is on sale. It might be going down to zero. I don't know, but it does look like it's in a lower area. Your RSI here is at 29. Your RSI here is at 34. That's a divergence. So we could be looking at a low price on Pfizer down here. You would imagine they're doing something in their office besides talking about how their stock has collapsed from 60 to 25. You would think when they go to work, they're coming up with a new drug, maybe that GPL thing where you eat pizzas all day and lose weight by taking a pill. Maybe that's what they're going to get into. Or maybe Alzheimer, which would be a heaven sent, right, for people who suffer from that disastrous disease. whatever they're doing, they're probably doing something. And when they figure out what they're doing and it comes out, it might be something to boost them on a recovery rally to 35 or higher there sometime next year, maybe, right? So this is something that's interesting of value as far as being cheap. And of course, the call options are dirt cheap as well as they should be because this market stinks. Another area of the inexpensives that could change would be the price of oil. Now, again, everyone thinks oil is never going up. And of course, Mr. Trump said he's going to drop the price of energy by 50%. So obviously, that's not a good thing when your president says that he's going to do that. You hate to fight his ideas, but sometimes these ideas don't work out as you think. So on a 20-year graph on crude oil, you can see that the lows are here and my momentum indicators are still above 40. So I think that's constructive. And if we can get above the gold line, which is where, let's see, that's at around 71. So if we can get above 71, and let's take a look at the February contract and the March contract, because obviously the times are changing. So let's go. We'll go to February. Yeah, so there you go. It's above 70 almost. And then so it's starting to make a turn here. And again, I find that very interesting. And down here, look at all that. I mean, when this thing does make a move, it's going to be a good one because that's called a consolidation. There's a pretty big width. So if you take the width of that and add it to the breakout point, or you take it there and break it to the downdraft, you know, a 50 to 90 price is certainly doesn't look like it might be out of the cards. And again, my momentum is holding the 40 area pretty good down here. So that would indicate that we are at the lows and we're going to get possibly a rally unless we break 65, 62, and then it could go in the abyss. And there you go. It's run up into the line here. So there's a reason why it stopped. So it could take more time, but it does look like it's trying to find some kind of a low area between 62 and 65, let's call it, right? And it looks like there's clear resistance between 72 and 75. But if you started getting above here, I would say the tides are changing and it's only a couple, $3 away from that. Now, why am I interested in that? Because I like to buy things that are very, very low that are going to get very, very high, possibly, right? You guys see the movie The Big Short? There was a couple of guys in there out of their garage who made quite a bit of money by betting on things that people don't think can happen. So this stuff is very, very down now. This is called Occidental Petroleum. That's a $72 stock that's trading for 46. We got a 31 RSI here, and we got a new low here at 33. So we got a little bit of a divergence there, right? A little bit. And again, that's the 1 year. If you look at the 5 year, it's coming right into gold. So again, some people like to look at things for next year and go, you know what? This is a very cheap ticket. And you know what? The prices are going into the support zone. And you know what Chevron said? They're cutting back on CapEx. They're going to give it all back to shareholders through buybacks and dividends. So who's looking for energy, right? So the bottom line is and China is doing what? They're 40% of global demand. So what are they trying to do? They're trying to stimulate their economy. Why? So people drive less? Now, of course, they got the electric cars going over there because of the pollution and everything else. But the bottom line is they're still a pretty big consumer of energy. And so bottom line is that, you know, there could be value in some of the energy oriented issues. And if you look at the big guys, they don't look that bad technically, really. Well, they're holding on to dear life now. But if you look at a 20 year, I think it's hanging in there. You see, the blue line's still rising. You see, blue line's still rising. So as long as this thing can stay above 105, and as long as this average is moving up, you know, don't kid yourself. There could be a situation where this stuff could be different next year than it is this year. Obviously, everybody likes to buy the things that are on the move, and I can understand it because obviously that's where the action is. I already showed you where I thought the action was, and I just rattled off about 6 stocks that I could see where the actions were. But and the SMH indicator clearly is back on the bicycle. So obviously that's where the action is. Let's look at your big ones here. Apple, again, you know, right here. 160. Well, let's go to the shorter term one. You had all kinds. You see, this is called a traffic jam. So 230 was the place to take your shot. And now you're making out good. Now, is it going to keep going? Sure. But this is not an easy place to work with because the premiums are high and it's already extended. It could be going to 290 for all we know. But it's not an optimum time from the standpoint of risk reward, from the standpoint of price of the options, from the standpoint of being in an area between 220 and 240, which was clearly a support zone. Same thing with Google. We just talked about it. I just showed it to you. And of course, Amazon probably in the same boat. Amazon gave you a great chance at 195, 200 here. Not that long ago. What is this? November 25th? Not even a month ago. You pull back, reversion to the mean, you take your shot. And again, once it got above here, another take a shot. Now it's a little bit extended. Again, you want to play it if it's going to 250, 260. God bless you. I hope it works. Same thing with Tesla. I mean, come on. You want to talk about Tesla? You talk about it 220, 240, 260, right? On the pullback, you take your shot at 300. On your pullback, you take a shot at 340. Up here, you're going to start buying calls. Well, God bless you. I hope it works for you. Okay. But this is pretty darn extended. Now, again, everyone thinks that, Musk is in the White House and he's going to get this guy to do whatever he tells him. And then he's got Xi over there because he's one of the only guys who are allowed to own a factory over there. Everybody else has to go through a Chinese counterpart, I guess. But so he feels, I guess, he's got the two biggest economies leaders in his pocket. And I think people are betting that way. The problem is they're all betting that way. And who do you think's selling up here? The public? So obviously it's market makers who are raising the price because the volume's coming in, because of the enthusiasm and the animal spirit that Musk is going to be walking around Washington with his kid on his shoulders like he was when he went to meet the Senate, and he's got the world on a string. He may. But again, at these prices, he better. Because again, if you look at the P ratio on this, if you look at how many cars they actually sell, I know he supposedly has a smaller car coming. I know it's supposed to be a fabulously popular car. Obviously, I'm not a big fan of some of these cars, like the SUV to me is a very horrific looking vehicle, but obviously some people like it. But anyway, you can't fight the tape, and I never wanted to be fighting the tape. So obviously, there's nothing bad you can say about this except what? It's extremely overbought. But that doesn't mean it's not going to, here's your 20-year graph. It obviously blew out the all-time highs. So where's it going now? God knows. Because how do you evaluate something that sells a fraction of the cars of GM or Ford, yet is priced like this, right? And again, you don't fight the tape on it. And this is called a parabolic move. So that's the story on Tesla. And of course, it's popular now. The other thing that's going parabolic is Bitcoin. Bitcoin, I got my hands around when it broke above 60. So let me tell you about that. There you go. Okay. Can you see here? This is when I was all over about it right here. When it broke above 65 here, right? It gave you the green light. Okay. The green light is extremely green now, and there's a big gap here. So what would I be looking for? There's a story that is told by many people that after the halving, which happens every 4 years, 2012, 2014, 2016, 2020, 2024, that Bitcoin can go up around 300% within 12 to 18 months of the halving. That seems to be a relatively popular idea. Well, we were around 50,000 when they split this time, when they did the halving, right? So obviously that would take you up to 150 grand. That's without the animal spirits of all these ETFs out there, without the animal spirits of something that's going nuts. So when is it supposed to be happening by? It's supposed to be happening by June of next year. But if this thing were to ever give us any kind of a rollover, and it has not done that, see, it had a chance to do it here, but it could not do it. I said under 95, it could open the door to fill this gap. Where is the gap? You see the gap right there? 77 to 82. If it came down into that gap, It would be very interesting to me because it would be coming down towards the red line. But it doesn't look like it wants to do it anytime soon. So there's no evidence of it. So it's just a pipe dream. Right now, what's not a pipe dream is going to 150 because that's the direction it's going. Two stocks that I've had on the alerts, MicroStrategy. I mean, if you're going to play something as aggressive as this, limited risk options on this, not terrible. In fact, last week I just talked about doing the 400 calls. Obviously, they're already 437. But I have been doing this for a while. Remember, I told you when it broke above that number, I said this was the thing. So look, we had the 145 calls in our deal. We had the 180 calls, 200 calls. Now we have 400. Okay. So we've enjoyed this ride on the alerts because I've identified this a long time ago as a place to keep an eye on. Coinbase, another one, right? But we liked it at 150, 200, right? 150 to 200. That was the greatest place to take a shot. And we went with longer term ideas. Part on the alerts, we go into long term ideas. This one looks like it is trying to break out. And then you've got your other players, because I have a list of 14, I think, different stocks that benefit from this. I'll just show you some of them. This guy here, we had this on the alert last week. Looks pretty good today. Next one is Riot. Looks pretty good. And Hut. Not bad. Okay. So I've got a list of about 14 stocks and about 7 ETFs that benefit if this stuff goes to 150. So it's not a bad thing to refer to. But okay, so we went over the energy, we went over to Bitcoin, we went over that tech sector that looks like it's hot. And if you guys had any questions, you could hit the chat box here. Do you have any stocks you want me to look at? I got about 5 minutes. Any stocks you want to take a look at, stuff you're in, you want to know what it looks like? I'll give you my opinion here. And so just put it in the chat box and I'll be more than happy to help you. But again, I gave you the interest rate picture. And okay, yeah, this is one I also thought looked pretty good from the standpoint of risk reward. Somebody wants to talk about Boeing. Let me get out of here and put up Boeing here. Now, Boeing is in a two-horse race, right? And the two-horse race is them and Airbus pretty much. But they've also been shooting themselves in the foot that even their podiatrist doesn't want to work with them anymore. So, but that's what I've been talking about. I've been talking about the 150s and the 160s and stuff like that because, again, if you look at a 20-year graph, it came right down to the gold line. So that's why I said, but this is a long-term deal. So I was talking about options that expire next September. Give it a year, give it a year or something. Because in a year, going up to 220, which was my target, seems like it could happen. And again, it looks like it's on the way to happening. So how do I feel about Boeing? I think it's a bargain down here between 150 and 180 if you go out in time and they don't do something stupid, you know, which but I mean, their deliveries on the 737 is supposed to be picking up. It looks like we're going to have to be putting a bunch of money into defense because obviously, Trump wants to play strongman. You can't play a strongman without weapons. So, I think there could be a lot of things that change here. And again, this stuff used to be at 400 and change. So picking it up at 120, 140, 180 is not exactly buying the top, right? So that I thought looked pretty good as well. Any other stocks you'd like to talk about, you simply could just put in the box here. I'm more than happy to take a look if you have any others that you might want to talk about here. What I'd like to talk about right now, if I could, is I'd like to talk about how I go about helping people with their options. Okay, let me give you a little background here. I've been doing the options for decades, and I worked professionally with options for decades. And I went to the Options Institute a long time ago for advanced training. and I worked with some of the biggest investment firms who had in-house training programs. So I'm pretty familiar with how options work. And I've traded thousands and thousands of contracts. Not tooting my horn, just letting you know who you're listening to is somebody who's done it for a long time and has quite a bit of knowledge and experience. Okay. So I said to myself, what can I do to help people obviously reach their potential with option trading through education and knowledge? And so basically, we started the options alert service with trading indicators, Daniel Sinig's group out of Montreal. And what we try to do there is we try to educate you, we try to give you some ideas to chew on, and then we try to give you some coaching in case you need some help. Now, some people are just starting out. Some people have been doing it for a while. Some people have done it for a long time, but they're certainly not pros at it, and they could use some more information. So we think we can help just about everybody out there improve themselves. Now, the first thing you get when you work with us is an options master class. What is that? Me and Daniel put together a 3 session, 6 hour comprehensive education piece on options. So obviously we start with the basics. What are calls? What are puts? What are strike prices? What are expiration dates? And all that kind of stuff. Then we go and we build on that to talk about different strategies. How do these strategies work? What are the use? What are the risks of these strategies? Why would you use one rather than the other? Okay. Then we go into coming in and coming out of them. How do you come into these things? How do you adjust the positions if they're going for you? How do you adjust the positions if they're going against you? And maybe where do you call it quits and cut and run if it's not happening at all? Okay. This is helpful information, I believe. And that's why we put it on the Options Master Class. Now that Options Master Class as a standalone goes for 497 bucks, 397 bucks, and we give it away for free. Why do we do that? Because we want you to know what you're doing. So that's the first thing you get is the Options Master Class. Second thing is every Sunday night, I give you a commentary on all the markets, and I'm talking about all the markets, stocks, international stocks, interest rates, the dollar, Bitcoin, gold, oil, uh, all the different stock markets around the world. I give you a little rundown on what I see. So you get a commentary, I think, that has value. Then you also get ideas. I like to specialize in strangles. Strangles are where you do calls and puts on the same time, and you're betting on volatility. What's the key to that? The key is to obviously try to get the premiums when they're very reasonable. You try to get a window that's not too wide, and you also try to get it in front of news or events that are going to cause volatility. Not an easy task. It takes hours and hours and hours to try to find these things. And that's what I do every Sunday night when we send out the alerts. We also have things that we like that are long term. I'll give you, like I showed you, MicroStrategy. We saw that as a long term. Boeing, we see that as a long term. What else did you see as a long term? Well, we saw Palantir at $31 as a long term. Why is that? Because if you look at $31 here on the 5 year graph, you can see that this was where it was starting to break out. And when it's starting to break out after this kind of formation, we think there could be quite a bit to run because all the moving averages are pointing up. So these are some of the ideas we thought had long-term values. And that's what we showed you. Okay. So you get ideas. Then finally, you get coaching. If you're an account of ours, you're a friend of ours. So if a friend calls up and has a question, we try to help you. The coaching goes for 200 bucks an hour. We give you an hour of it that you can split up for free when you join. So that's a way of calling up and going, "Hi, Jim, this is Joe. Hi, Joe, what's up? Well, I've got a question on this. I've got a question on that." Now, we don't give advice, but we can answer questions of a factual nature with our opinion and our observation. And that's what we do. So again, if you needed to have a question answered, it's nice to call up somebody who knows you, who you could ask a question, and who's been in the business of explaining options for decades. Like I say, I've done seminars throughout the country and internationally. So I'm aware of how to explain it to not only the persons who never done it, to the people who have some knowledge, and then to the more experienced. So that's the trifecta. And I think it's more than fair Because again, there's people charging thousands and thousands and thousands of dollars and all this stuff. All we charge is 297 bucks. It's a 90-day investment that you're making into your education, into your knowledge, and to have access to somebody who can help you with your questions. That's a very small amount. And so what I've been telling people now is buy yourself a Christmas present. And what's your Christmas present to yourself? It's a $297 Christmas present that gets you going for 20 and 25. Because I've been telling people since we had that big drop in August that there's never been a better time to learn about options because the VIX is low, Trump's coming to town, right? And there's a lot of opportunities in 2025. So now is the time to do your education. Now is the time to figure out how these things work. Now's the time to align yourself with somebody if you had a question that they could help you with your answer. Okay. So when I say this is a great time, it's not just a bunch of sales baloney. It is the truth. Because again, when the VIX is this low, option premiums can be very low. That's why you're seeing explosion in the SMH stocks, right? That's why Google is no longer an easy deal because I and others noticed that the premiums were very low a while back, like a week or two, not a long time ago, right? I mean, come on. Broadcom was at 175 a week or two ago. Okay. So it's not like this is ancient history. And if no one told you about that beforehand, it would make sense to check it out. So again, I'm inviting you to buy yourself a Christmas present and get the options alert service. David's going to put up a place for you to click. If you have any questions, you can email me, optionprofessor@gmail.com. OPTION, professor, PROFESSOR @gmail.com. If you're doing something else, you could always send me an email and go, Jim, I'm doing something else here, but show me exactly what you bring to the table and why your deal would add to what I'm doing or could replace what I'm doing. And so basically, click there if you want to get started. Again, 297, you get 90 days of alerts. Every Sunday night they come out. You get your options class and you get somebody to talk to who actually knows who you are. And obviously, like I tell you, if you're a customer, you're a friend, I'm going to do the best I can to help you. Okay. So that's the story. And again, if you have a question, don't just go away and go into the abyss. OPTION, professor, PROFESSOR.com, excuse me, @gmail.com, option professor at gmail.com. Jim, I've got a question. Can you help me with this? Jim, here's my phone number. Call me when you got a free time. And then I'll contact you and we'll go from there. But this is no time to, like I told you since August, this is no time to think about it or forget about it or put it off, or I think I'll talk to you after the first of the year. I mean, this is the time to get your foundation done. The time has actually come and gone, but it's still here. It's not the next year yet. You can see things are on the move. What are you going to wait until they go really on the move? And of course, we have a reversion to the mean potential in Q1. This would be the time to be ready for that. So again, we're at the top of the hour here. I'm going to sign off. This is Jim, the option professor. Either check out, get started. It would be the first thing. Buy yourself the Christmas present for $297 or someone you know. And or send me an email going, I got a question here or there though, but I'd like to talk to you first, and we can do that as well. All right, guys, have a happy holiday. I hope you learned something today. I hope you sign up so we can become friends, and I hope that you guys all have a healthy, happy holiday season, and of course, a great 2025. This is Jim, the option professor, signing off. Good luck on all your trading, and God bless. Okay, we'll talk to you soon. Have a good day.